Hello, this is Sergio Marrero, and we're here with another episode of RBL1 Live. We have an amazing guest this week, serial entrepreneur, a founder, advisor, investor, Rachel Brink. Thanks for joining us tonight, Rachel.
Hi, Sergio. Thank you for having me.
Yeah, honored. So just to share a little bit more about Rachel's background before we dive in, alumni of Y Combinator. She's also an alumni of Columbia Business School, getting her MBA from there, and Babson College. Has started multiple startups, including one of the latest has been Scentbird, where that raised over $24 million. Has also been an investor at 54 Ventures, and is a mover and a shaker in the space, also with 500 startups. So thanks again for joining us tonight, and excited to hear more about your story.
Thank you.
But if we can share a little bit with the audience, can you share, we're going to dive into Scentbird first. Can you share with the audience what was Scentbird, or what is Scentbird?
Sure. So Scentbird is a subscription service for fragrances. We started it in 2014. And it really starts sort of that stereotypical startup story where I met with my co-founder, Maria, who's still the CEO. And we, met for coffee, started to talk about the fragrance category. And, what was 30 minutes became 4 hours. And we decided we were going to totally shake up the $14 billion fragrance category with technology. And that's exactly what we did. So with Scentbird, you get to try a different perfume every month for $15. So we built partnerships with the likes of Coty and LVMH, as well as cool brands like Nest and Glossier. And it was an incredible ride. We were backed by Y Combinator. We raised 24 million. And my role specifically was sort of, CMO, CRO. So driving both growth as well as the business development side.
Absolutely. And so how did you, it sounds like, a simple concept, right? Like you have fragrances, passion for e-commerce. How did you go from, focusing on business and your MBA and building a career in marketing to being a chief revenue officer, pushing of this startup?
So interestingly, it's interesting that you asked that question, because I spent 15 years of my career with very large incumbents. I was managing 500 million to $1 billion brands at Estee Lauder and L'Oreal and Bacardi. And, I think the opportunity I saw was to really innovate in the category. And I think a lot of what we were sort of pushing the boundaries was about, the new ways that consumers were consuming the category. So the vision, what we saw is that millennials and Gen Zs wanted to date perfumes before marrying. So while, the Codys of the world and the manufacturers of the world were sort of built on this idea that, sell everybody big bottles, and that's how manufacturers made money. What consumers actually wanted was smaller travel sizes, and they wanted to date around. They wanted to try new things. So I think that was a key insight of just how consumers were consuming the category. I think the other part of it was just demystifying and opening up the category and making it much more accessible. Because if you go to a fragrance counter or even a website and you look at most manufacturer descriptions of fragrance, it's like fougere and idyllic. I have no idea what those things smell like. 99, and I'm part of the industry. 99% of people have no clue. So what we were trying to do was create sort of a low cost, low barrier to entry, right? It's $15. We give you a lot of tools, really visual quizzes, easy ways to figure out what you're going to like. But at the end of the day, if you're spending $15 and a cent and you don't love it, you'll give it to your friend, you'll give it to your sister. Whereas, buying a $100 bottle of perfume is a big, or $200 bottle of perfume is a big commitment.
Great. And I love it because it shows as two things, right? It's like you think about your, 10, 15 years of experience in an industry and bringing that to bear. And then also how it can be it could be improving the simple things. It's transforming that experience. How did you end up? You said you met your co-founder. What was that first interaction like? How did you two pair up your experience?
So it was, I'll tell you a little bit about, my personal journey is that I had been in corporate for a long time, and I knew I wanted, it was 2014, but I still think it's true in that I thought that the large incumbents were just not fully embracing the potential of digital and the potential of e-commerce. And I was frankly feeling frustrated and feeling like the innovation wasn't coming out of the large CPG companies. Like it was the startups, it was the D2C that was really sort of bringing that up. And so initially my thought was, well, I am going to work 4 days a week in a corporate job, and I'm going to dedicate 1 day a week to consult with startups. And what I quickly realized is that startable consulting clients, because they have no money to pay you, but B, and I hope you appreciate the irony of my t-shirt. But I think B, and I think this was the biggest aha for me is, a lot of startup founders are super smart individuals. They have really unique ideas of how to address consumer needs or business needs. But what they need is, it's not just, well, tell me what I need to do. It's like, help me get from point A to point B, like make it really actionable. And so, as I was doing this consulting, I realized it just wasn't very satisfying because I felt like I couldn't move the ball fast enough, far enough. So when I met, and I had three co-founders, and I'm no longer with the business. They're still with the business. They were all young entrepreneurs who didn't have any industry experience, but had digital experience, had programming experience, had fundraising experience. And so it was a good, one of the things that I always love to see in startup teams is this idea of, the yin to the yang. What are the complementary skills? That's a really important piece of how startups succeed. I think that our human nature is to try to find people just like us, but what we should actually be forming is people who are as committed to the business as you are, but bring different strengths. So that's kind of the story of how Scentbird started. It literally was, we met for a coffee. The funny story is that my co-founder Maria forgot her wallet, so I had to pay. And she was very embarrassed, but that sort of kicked off the conversation. And I was there for 6 years, and the company's still doing extremely well and growing well.
How did you make that transition? I know that's some of the biggest fears of early stage founders, is to bring on someone who's been in corporate and is too corporate, right? Not as flexible and not able to adapt. So how did you make that transition smooth for you? What were some of the challenges there?
So I think that it is super hard. Not everybody can do it. And in fact, I know a lot of horror stories and a lot of times where it doesn't fit. I think that you have to have a lot of very honest conversations, because startups are very sexy and it's fun and it's technology, but you also have to realize the amount of hustle you're going to take, the lack of you have to be comfortable with ambiguity, comfortable with zero resources, comfortable with I went from a very structured environment where I had my daily schedule full of meetings to the four of us in a room and go figure out how to get customers, right? It's a pretty dramatic shift. And I do think that I think it does work for some people, it doesn't work for others. And I think that if you're in a corporate role, you also have to be very honest with yourself. If this is the type of risk you want to assume, if this is the type of role you want to assume, or if you want to, collaborate or work with a startup in other ways, because it is pretty dramatic. It is a very, very different, your day-to-day is very different.
How did you make it work for you?
I think I will say the first couple of weeks, I was a little but who am I meeting with? Who am I discussing this with? And they were all like, well, yeah, just go figure it out. And I was like, okay. so I think that, you have to be very self-directed. You have to be very comfortable with zero, there is no process, there is no system. You're going to build it yourself. And so if you're somebody who feels comfortable sort of taking what you've learned and saying, okay, I'm going to be in an environment that has zero process. I can't just take 100% of what was working in that old place, because that doesn't work. But here's the things I know how to do and do them well. I think that works. I think that you have to be quite humble. I think sometimes where I've seen corporate people stumble is that they keep on saying, well, when I was at Estee Lauder, then go back to Estee Lauder. That's great. Estee Lauder is a wonderful company. But I do think that, sort of opening your mind, embracing change. I think the other thing that takes some getting used to is, for me, it was just like the speed of change and the speed at which we sort of iterated and tried stuff. And I think that when you're in a corporate environment, it's sort of a very high stakes. There's a lot of risk in trying new things. Whereas, part of what I love about startups is like, we tried stuff every week, right? And some of it stuck and some of it didn't. And yes, sometimes it was like, what new website, what new software, what new tool do I need to learn this week? And are we even going to be using this next week? And again, I think approaching it from a little bit of humbleness and hunger to learn, because otherwise you will get frustrated and your co-founders will be very frustrated.
That's great insight. For you, going from, you were at Scentbird for pretty much almost 6 years. What after moving on from corporate, what made you want to say, hey, I want to move on. This is the next step now that you you didn't run back to corporate, like no. What caused you to say, hey, I'm going to see what's next, and what did you go from there, if you want to share with the audience?
I think I'm always a student. I love sort of getting a chapter and going very deep into it, but then I'm ready for the next chapter. And I think that's very much how I've navigated my career, where there is a progression. It's one thing building on the next, but it's sort of the new chapter. When I thought about what I wanted to do after Scentbird, I spent a lot of time thinking about, do I want to go out and start something else? Do I want to join another startup? And what really got me excited about venture was the ability to have an impact into so many companies. I felt like I had achieved so much at Scentbird. Again, the company's doing great. I think, I left it in a very good place. And I had done so much at Estee Lauder and L'Oreal. And so I was ready. I loved the idea of being able to interact with so many different companies. And the other thing that was interesting about 5-4 Ventures is I really wanted to understand the entrepreneurial ecosystem from the venture side, because I think that you need to really understand both and the interactions of both. And, I always say that, the first time I was I was a partner and we sat around the room discussing an investment, and it felt a little bit like being an 8-year-old, where you have your first sleepover and you look over and you're like, that's how you cut your sandwiches? And it wasn't like very smart people around the table making very smart discussion, but it was just like, oh, wow, that wasn't exactly how I thought they were thinking about it. So I thought that was really interesting. I also, it was very interesting to me. And now I understand, right? Because when you're investing on venture, even if you specialize in a category, you're looking at a ton of different companies. So you will never know as much as the founders. And so how much sort of venture leans on each other, leans on, what do you think about this investment? And why did you invest? And so I like that camaraderie, but I also thought, gosh, there's a lot of risk in groupthink when it's all about, well, what does my buddy Andy think? And what was my buddy John think? And yes, most of the time it's guys. That is reality. But that was something else that really struck me is as much as there's some really smart thinkers, there's also quite a bit of groupthink.
And as we look at venture, right? You made the transition from founder to venture, and potentially back to founder. We'll see what the future holds. But if you can share a little bit, what's your perspective as a founder? Same for me. Was more on the founder side. Kind of fell into investing. Still, I would say founding a fund is a different type of startup, for sure. But
yes.
If you can share, what are some of the ways in which you see venture evolving?
So I think I'll start with some advice for founders, and then I'll go into like the venture part. So I will say that now that I've sat on the venture side, you have to have a tight pitch. You have to be able to explain your business really, really fast, really, really clearly, really differentiate, show that you understand your market, validate why you're the best person to do this. I can't tell you how many times I've sat in pitches and it's sort of like half an hour, 45 minutes into it, I'm like, I'm still not sure what they're building, right? And I'm a pretty smart person. I've been doing this for a long time. And I think sort of like that clarity, that crispness, like I would really tell founders, like, make sure you have it nailed, make sure it's super clear, make sure it just kind of, splurs right out of you. I think that there's something really interesting going on in venture right now that I find super exciting. And it's the fact that, look, on the one hand, I think the last year has seen a huge explosion of emerging fund managers. The sort of C to A round area, which is where I play, has, it's getting a lot more crowded. You're seeing Lightspeed investing there, Anderson, like all the big guys are going back. And I think what's happening is that if you really want to drive value, you either go super early or super late, right? Like you're either, otherwise you're going to get diluted to death. So either you're so early that you have a very early valuation and it's huge upside, or you're late and the next one is an exit and then you're golden. But the middle is much tougher. And so in this area of sort of early C to A, there's a lot of money sloshing around. And there are a lot of people who, venture seems sexy, venture seems interesting. But what I'm seeing, and I find really exciting, is, the smartest founders are looking for smart money. Sure, money's green, it's all good. But the smartest founders are saying, what more can I get from my investor? And that's really, what I think about a lot on all the companies that I've invested in is, how can I give them value? Because I know how hard it is to be a startup founder. I know how grueling that journey is. And if I get the honor of being part of that journey, I want to earn my keep, not just through the dollars, but through the value that you can bring. And so I'm really seeing a lot of, these operator investors that bring in a lot of value added. And I think it's a good thing. I think it'll make the entrepreneurial journey better. I think the other side of it is, look, the last year has been tough. There's been a lot of conversations about Black Lives Matter and diversity, but I think there's also been there is a real quantitative approach that shows consistently that diversity in teams, diversity in experience, diversity in thought, diversity in gender, diversity in ethnicity just yields better outcomes for VC. If you have a diverse founding team, if you have diverse fund managers, and I think that the smartest founders, whether they are diverse or not, are realizing that there is that value, again, that smart money, and the value that diversity can bring in their cap tables, but also as advisors. So I think these are really positive things.
Yeah, and it's great to see that now it's a mainstream topic of discussion, or at least more comfortably so. I wanted to go on the value add piece that you mentioned, and I would say you're part of your superpower, right? The marketing. When founders come to you and they're like, "This is amazing. You joined this brand early and you grew it to be this, very large business, raising over $20
I
million.
joined, yeah, there was nothing. Yeah.
And can you talk about that? Like what advice do you give them on building that out? If they come to you at that stage and they say,
Yeah.
I don't, I have 100, I've had 100 customers. Like, how do I get to 10,000 or
Yeah.
tens of thousands? Like, how, what's some of the framework that
So
that you give them?
yeah. So I think that first of all, I think you have to be brutally honest with yourself on whether you have product market fit. When we started Scentbird, we actually started with a different business model. And I remember, us four co-founders sitting around in a room discussing the 10 people that had visited our site. And I mean, the numbers were brutal. It was so sad. It was so terrible. And at some point, we had to look at each other and go, oh, this is not product market fit. And so I think that that's a really, and, I think that sort of taking a step back, if your product has product market fit, it's a little bit like, I hate to say this reference, but it's a little bit like pornography. You see it, you know it when you see it, for lack of a better analogy. But I think that, spending a lot, that's one part that I talk a lot to founders about, of like, do you know your product market fit? The second piece is like, do you know your customer? Why are they buying this? I spent a lot of time with customers. And if there's one tip I would give customer, kind of early stage companies that worked really well for us, is sort of a quantitative, qualitative approach to how you interact with those early customers. My kind of little tip is, put together a survey, do like a type form, make sure you're being unbiased, make sure you randomize, don't ask leading questions, but, send out the survey, but then read through the survey and find the most eloquent answers, find the people that are really articulating well, whether they like your product or not, and call those people up, get them to talk to you. If you have to offer them an Amazon gift card, offer them an Amazon gift card. But getting that feedback, because, initially what I would try is just sending an email to everybody and trying to get people on the phone. And the problem is you get a lot of people who are like, yes, no, maybe. So those people aren't too helpful. But if you kind of filter it through with the survey first, you get some qualitative data out of the survey, and then you can really dig into the interview. So, I would say that's sort of the very, very early stage of like, what are they buying? How are they buying it? Why are they buying it? Like really dig into that, because that's really going to have to educate how you market your product. I think the next stage, once you know what you're selling and now you're like, okay, I have a product, I'm going to go out there and sell. I think a big part is there's sort of an inherent conflict between, on the one hand, look, if you're just starting off, like, Paul Graham always says, like, do things that don't scale, right? Like, just go out there and get customers. But at the same time, I see a lot of startups that are just starting off and they're doing like 27 things, right? And so my advice is always find 1, 2, maybe 3 things that you can be exceptional at when it comes to customer acquisition, and like test, iterate, A/B test, like go at it like gun ho. Because that you can always add more strategies later. But if you're so dispersed with so many strategies, you never really, like, what's going to happen is you kind of get to a level because you're getting a little bit here and a little bit there, but you never bring it to that next level. And so I think it's much healthier for a startup to sort of hone in on those strategies that work, test, iterate, get them to a place where they're at least a little bit stable, where you have a predictable sort of money in, sales out model, right? A predictable cost of acquisition. All those things are going to be variable. A predictable LTV, even though, as a startup, what do you know? You haven't been in business for a year. That's always one of my favorite questions. But, starting to get some stability, some like strong indication, some sense of, if you got another $1 million, what are you going to do with it? And what are you going to get out of it?
Excellent. And taking a step back and looking at the e-commerce space. COVID, everybody has to stay in one place. And of course it's boomed now. What are some of the biggest trends that you see? And with COVID, what's here to stay? I know those are two different questions. But.
Yeah. So so number one, I think that if you go to my Twitter, you'll see that there's a pin that shows the shift that happened in those first 10 weeks, how e-commerce boomed. And my pinned tweet says, this trend is here to stay. And I 100% stand by that. I think that our 10 Brink one, by the way, what you're going to see is, I mean, sure, we will go back to restaurants. We will go back to traveling. I actually feel like it might be like the roaring 20s where we were all kind of desperate to get out. But I think there's a lot of consumer behavior that once you learn that you don't need to spend your Sunday afternoons in the supermarket, why would you? Once you learn that you don't have to drag your kid to Target to buy shoes, that you can just order them online and exchange them without the tears, why would you? So I do think that, right now, I think the latest number I saw is e-commerce is about 20% of retail. I think that number continues to grow. And I do think that certain geographies, like in China, it could go to 80%. I mean, when you look at certain geographies where there's a limit in terms of access, I think e-commerce will stay really, really big. Now, your second question, which is about, what are the trends? I think that, and this is something that I've always said from my days at Scentbird, which is D2C is a launch strategy. It's not a be all, right? It's not a business model. It is a launch strategy. And so number one, I think omni-channel is going to continue to be the way consumers shop, learn about brands, and the way brands will continue to scale. So while I think e-commerce will be huge, while I think that direct relationship that you can build through D2C is incredibly important in educating customers, I think that, whether it's Target or Sephora or whatever, West Elm, whatever your category is, the fact that you will have some retail is going to be really important. So I see that as a really important trend. I think that consumers will continue to sort of delight in the innovation of D2C products, but I think the days where you could just buy a bunch of cheap Facebook ads and build a $10 million brand are gone. I think now you're going to have to see real sort of functional benefits, unique products, patented technologies, like real differentiators that are more than just brand. And I think the third piece that I would talk about is, I call it the arming the rebels. And it's the fact that this shift in e-commerce has opened such huge opportunities in e-commerce enablement. And so when you think about, I mean,
can you share a little bit of what is e-commerce enablement for those
Sure.
that are, yeah.
So when I think about e-commerce enablement, I think of everything that makes an e-commerce company better. So it starts with acquisition, retargeting, remarketing, everything to do with logistics, everything to do with returns, encouraging repurchase. It's sort of the whole life cycle of the customer. How do we make the life cycle of an e-commerce customer better through different headless commerce tools? So I'm very bullish on that side of it. I think that because of this huge shift, there will be a lot of brands and there will be a lot of small brands that will need a lot of help to effectively compete in this marketplace.
Amazing. So love the insight for those aspiring founders. I know we're just about time. So wanted to say thank you, Rachel, for sharing your story. For everyone that tuned in, this is Rachel Brink, investor, serial entrepreneur, and advisor of 500 startups, among so many others. So thank you again for joining us tonight.
It's really a pleasure. I love chatting with you.
Yeah.